Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, March 6th, 2016. Hope you guys are having a fantastic weekend. So let's get started. Friday started out being really frustrating, but there are signs that we could be in the process of making some type of top. And the reason is really the reversal that took place midday, as well as where it reversed, which was right in the resistance zone. Now, there's still a chance that they can come up and close this gap. I almost expect it, but I'm still on the side that we are, we're going to get some type of pullback before we head up, and there's no certainty that this gap will be closed. It, just typically that is what, what happens in, when we see gaps, but there's a number of gaps that are below here that most likely will have to get filled also. So right now we made it right into the heavy resistance zone, and if they try higher, this is where I was saying the issue that the bulls have, especially in the way that they've done it, where they haven't really taken any breaks, is we have this resistance here. If it breaks above it, you have the moving average at 2023. And we also have this resistance line that's right here as well. So there's a number of resistance levels here, and where it reversed, it actually makes sense. So I would continue to be very careful if long. But the bears have some work to do before they're going to be able to get momentum going. And still the overall pattern is that we made a wave A, we're now going to make this wave B, and once it completes, we're going to make a wave C that most likely will take these lows out. So they've burned off the extreme oversold conditions right now. We are now right around the midpoint, could go a little bit higher on it, but you can see the price oscillator is, these are these green bars here, is at extreme levels. So to me, we're probably on the tail end of this move right here if we didn't already complete it. Now, if we take a look at the 60-minute chart, again, here's that resistance zone. But this is the part that I would be very concerned if you're a bull, is it's still trading within this rising wedge right here. You can see we hit the top of it. So what the bears are going to need to do is really break it. Let's just say the 1966 level. If it breaks this moving average here, we will have broken through the rising wedge, and most likely this move will be over. But as you can see, we have the bottom of this wedge right here that's right around that 1984 level. And we have these bearish divergences in place that, at some point they're going to have to pay the piper on this. These moves aren't, sustainable when you don't really have a whole lot of, let's say, conviction on the buy side. A lot of these moves have been, very orchestrated short squeezes, and the problem with that is that once the shorts are gone, there's usually lack of buyers, and that's when we see momentum pick up on the downside. So we're still within this rising wedge. We still have these bearish divergences. We still are very overbought. And, really what I would anticipate is if the bulls are going to try to close this gap up here, most likely they're going to come down and probably test this 1966, maybe even a little bit lower than that, before heading higher. And really the sole reason would be to try to trap some more shorts. Now, again, there's no certainty that we are going to come and close this gap, but if it did and it holds here, it's something that you just want to kind of respect it, and leave the door open that they are going to try to close this gap before heading lower. But again, where the pattern that it's in right now, the resistance levels and the bearish divergences are saying that we could get a sharp move to the downside, and it really could start at any point. So here is the 5-minute chart here. And I'm sorry, the 15-minute. Now again, we have these bearish divergences in place. And what this is right here, these yellow squares, they represent time and price. So here you can see from this low to this high, this is what the box is. So if we take it, what we want to do is just kind of measure and see where we stand, and you can see we're excuse me, we're past time wise as far as what it took to get here. And if it's going to do an exact match of it, then the target will be someplace up around that the 2026 level, which we didn't really get too far off of on Friday. So this is your time and price from this move. Now, what this is going just from here to this high, and what's interesting about that is that's pretty close to where we reversed. So this is your perfect, as far as price wise, where it reversed, it made sense. So you can see towards the end of the day, we had the sell off. We saw buyers come in right at the moving average. This is what they've been doing the entire time. So once this breaks, that's when I'm anticipating that we will, probably see the move come someplace down into the 1961 area, and that's also support, which is right here. So this is going to be your important line in the sand, is going to be this 1961. If the bulls don't defend this, then the sharp drop is, you're going to see momentum pick up, and it's probably going to come down to the 1931. And what that will do is put at risk this entire rally is over, and we are in the process of starting the next leg down. That would be the wave C. So there's still work to be done by the bears. I think really the first let's say sign that this, it's really starting to stall will be when the S&P breaks through the 1987 level. If they lose that, that's when we're going to, we should see a quick drop down to the 1980. And if they start losing those levels, then again, this is going to be the big challenge, the 1961. And if the bulls lose that, then I'd feel more comfortable saying that we are probably in the process of starting the wave C. So right now, I think Monday's going to be pretty important, because if they don't gap it up, then this, and we actually get a red day, then what we'll do is this will open the door that this is your bearish candle where we ran into the resistance and reverse lower. And from there, we just start watching the support areas. If they hold one of them that I've been pointing out, then we leave the door open that they're going to make the run to the 2040 level to close the gap. If they start losing these support levels, then we just anticipate that this entire move has ended. So with that, let's see what plays out on Monday, and enjoy the rest of your weekend.